Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get cut. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it is Wednesday, and we had ADP earlier this morning. Not too much of a market reaction, but I guess that's because we had such a massive reaction to the JOLTS job openings number yesterday. So let's come in and take a look at the aftermath, shall we? So got some more rollovers. Well, these ones don't really count, because we can still trade that for another 2 days. Wonder why it's telling me to roll it over now. Okay, but anyways. So here's ZN. Yesterday, pretty big move. Oh, let's get rid of this ruler we put on here. Okay, so pretty big move overnight. By the way, I was saying, like, you know, if I was waiting for a pullback, maybe 16. Didn't quite get there. But I made a pretty good estimate. Worked pretty well that time. A little bit higher for the session. The end of the session at the highs, and since then they've kind of come back. We are at 4.145 right now on the 10-year. Now, I mean, in the larger scheme of things, there's still plenty of upside to go if conditions kind of weaken. So keep that in mind. You know, I think that we could still potentially go along here. S&P 500 rallied crazy. Like, this is a little, man, that rally was wild. Equities really liked what happened, right? Oil trending a little bit higher overnight. Gold and silver, of course, very relieved from this. Silver in particular getting almost to the July levels. By the way, where's gold at? They back to 2000? Well, about $30 left. And copper's doing okay. Then we got, well, we got to talk about the Bitcoin. So the story in Bitcoin when we had left, and I apologize for having to leave early, but I had an early morning meeting. The story was that the SEC denied Grayscale's Bitcoin ETF, and the court said that that was an unreasonable decision and basically ruled that the SEC has to go back and revisit that decision. Okay, hold on. We're going to get like GDP estimate here. I've taken too long. Okay, so I'm getting 2.1 versus an estimate of 2.4, and the treasuries are buying on it a little bit. Am I on the right contract? I am. Very, very light liquidity, but a reasonable amount of trade around 26.5. I'm going to go back to the charts and let this sort itself out. Real quick, the dollar got creamed and is pushing lower this morning and is getting pushed lower on that GDP news. So I was going to say on Bitcoin, because I think it is an important thing. Basically, what happens now is the SEC has to go back and revisit that decision. Now, the thing that you have to realize is that pretty much everybody on the SEC board are against this ETF. So they're probably going to come up with another reason to deny it. They might go back and deny the futures ETFs that they had. I thought that their reasoning for it was reasonable. They could just appeal the decision And so just reflexively buying Bitcoin off of that particular news, it's still dangerous. I mean, if they get an ETF, then like for sure, I think we would want to be long Bitcoin. But that news does not necessarily mean that it's actually going to happen. I'm seeing a lot of analysts kind of jumping to it's almost certain that it's going to happen now. I am not convinced, because at the same time, that this is going on, the SEC filed a sealed proceeding in court, which the SEC like literally never does. And probably the most likely reason why they would be doing this is because they are doing criminal proceedings, and they don't want all of that information to be out so that the people that they're investigating could do stuff. So it seems like that there could be more serious criminal proceedings against Binance, and that's why they're doing that. So you really think that at the same time that the SEC is like proceeding with a pretty serious charges against all of these other places, that they're going to go back and say, okay, but you I guess you can have the ETF the court made us? No. So it's a risky trade. It's a risky trade there in Bitcoin. Okay. Good morning, Wealth Talk. Good morning, Uzi. Now, the other thing I think I have to address, because yesterday, the loss that I took yesterday was not an unusual size loss. It was 15 ticks, and it was actually pretty good that I was able to read the tape in the end and see that the flows were not in my way and get out before it would have been really bad. Because if I had been in that, it would have been like $200 or something, right? So that's okay, but it certainly hurt. And I feel that I just, I've kind of been slacking a little bit. It's the summer. Maybe I've been going through the motions a little bit too much. Haven't been super sharp on the news and everything. I mean, that is a situation where it's super crazy. Would never have expected that big of a change and everything. But those are the kind of situations where we should excel. So I really feel like I dropped the ball, and I owe you guys a little bit better. So we need to be like way more keyed in. Not just in terms of like, watching the flow here, but in doing my research and everything. So I also think that something that I may be falling victim to here is I've got so much information and I'm not organizing it very well, that I'm just kind of like read all the things and figure it out and then kind of wing it. And I think that I might need to be starting to do more explicit writing things down and tracking stuff and everything. So because we knew that the unemployment data is kind of BS, right? And that it was coming back. Now, the thing that I see right now is that equity markets are going crazy. Everything that I see kind of suggests that those flows can kind of continue for a while. When you look at volatility, volatility is actually kind of set to contract over the next 2 weeks. So it kind of sounds like what could happen is markets continue to move up and volatility contracts for 2 weeks. And then after that, more risks emerge. So that's kind of our game plan for the next 3 weeks. Over here in the treasuries, though, we could see continued upside. So we lost about, 2 basis points off of that GDP news? Now that it's kind of all gone through, let's look at all the numbers. So ADP was 177 versus 175, so slightly weaker than expected, but there wasn't much of a market reaction off of that. GDP second estimate was 2.1 versus an estimated 2.4. Okay, so 2.1 versus 2.4 is not necessarily like a huge difference. It's a normal sized difference in terms of GDP, but it's the second estimate. So to see a revision of that much for a second estimate, I would say is a little unusual. That's usually only like 1%, 1/10 off. So I'm not quite sure what's going on there. US PCE prices preliminary was 2.5 versus 2.6. Wholesale inventories month over month, negative spot 1 versus negative spot 3 expected. So I think that it really is just all about that headline number. We did have a decent pop there, about 14,000 net contracts long in here. I think that we're likely to pull back a little bit further, although I wouldn't be looking for this one to retrace all the way. But let's see. So, you know, it continues to do this thing. It's been doing this a lot lately, hasn't it? Where it makes the move and it kind of hangs out up there, doesn't it? So you have to be really, really patient to get a good spot and be willing to let it go without you, which is really quite frustrating, actually. So, but let's let it do its thing and work itself out a little bit. Let's put a commercial on here real quick because YouTube loves that. So, and then we'll kind of look around the net, see what else we got to look at. Okay, so I think most of you guys should be back here now. Looks like they are going to tick a new high there. Just by a few ticks. It was very brief. It's kind of reaching. That was a lot. That brings us to like 21K net. That's I'm not sure I can jump on that one. That seems like too much to me. Well, it's really hard because surely we should see some continued buying from yesterday too, right? But I'm not definitely can't although I want to, and maybe it's the right decision, I think it's too risky for me to go in and try and buy these highs. Yesterday, I do not understand why the dollar decreased. Okay, I can explain this. It's a good question, Amir Guya. Because, you know, it's kind of like the whole game. So, the news that we got yesterday was that the job openings has decreased significantly, and a bunch of these other employment data points have been revised lower, which means that the labor market is not nearly as strong as we thought it was 2 days ago. Now, that's important because the Federal Reserve has been raising rates to try and weaken the labor market and bring inflation under control. So if the labor market is weaker than anticipated, that means that the Federal Reserve does not have to continue raising interest rates. Okay. So overall, it means lower interest rates. And that's what you've seen. We were up at like 4.3 and now we're to 4.11 in interest rates. Okay. So the interest rate is lower. That means that you don't make as much money for trying to hold your money in dollars. Because what happens is the banks move their money. They say, let's say that they have euros. They convert those euros into dollars, and then they turn around and they buy treasuries with it because they're going to get a better interest. Well, they buy treasuries essentially. When those interest rates go down, there's not as much reason for them to move their money into dollars, essentially, and so the dollar weakens. I kind of messed that up because I had a little bit of a brain fart in there, okay? Because I was thinking, oh, well, the thing is that the rates go down and no. Okay, so when rates go down, the dollar tends to go down too. That's the broad correlation that you'll tend to see, okay? Is that the dollar will be like inversely correlated with the treasuries, right? Or the other way you could look at it is that the treasuries are positively correlated with the Japanese yen. Right? There's less reason for them to bring their money over into the United States because the interest rates are lower. And, everything else kind of reprices off of those lower interest rates. And then that's how you get the crazy equity market that you got yesterday. Even if bonds are backed by the government, if rates go high enough, can the value still go to zero? If so, would they have to issue new ones, or are things in place so that doesn't happen? Situation that would bring bonds to zero would be like hyperinflation and a complete collapse of the system. So ... Man, it's not stopping. It's not stopping. I'm having a real hard time here, man. I'm hungry, man. I want some. They're going without me. You wanted to stop, just trade it? I know, right? I'm definitely still weirded out by that trade yesterday. Like, I don't think it's the only time that it's happened to me, but that was like a top 5 worst for sure. And like I was saying yesterday, the only one I can think of that like was worse was when I caught like 40 ticks slippage on ES once, right? And this is all coming at a time where I've had a pretty mean drawdown. Like it's really being frustrating for me right now. I'm kind of looking back and I'm like, well, how much of that was, being towards the end of the contract and stuff? I'm not sure. I think that is more than that. But, the market has kind of been in a shift for a while. Ever since, like, really going all the way back to, like, maybe August 15th, right? So... Now, in this situation, one of the things that I've been thinking about is that, like, it wasn't very long ago. It was only a month ago that we were at 4% and we were below 4%. In fact, there was a time when we were at like 3.7, right? So, given the degree of the shift and everything, I think that 4% should definitely be like our next major stop. It's just kind of like a matter of, for us on day trading, reducing our risk and getting the right prices for it. Like, I think that I probably could, you know, sell rates at 4.1 and hold it till 4% and make $100, for instance. The other thing, you know, we should definitely talk about this. Another thing that's going on is, well, ignore this gap right here, but the yield curve, the 2 and 10, steepened considerably off of that news. So, and we're seeing steepening on this move again. So it's not very often that you get such a good trade on the steepener side. So that's the other thing I'm wondering is, should I just be in a steepener? You know? Should I just be short 30s and long 2s or whatever? Okay, it seems like it chilled out a little bit there. It's definitely a 20,000 contract change. I don't know, if this just keeps going and we get like 30, 40, 50, that's gonna be like a crazy move. Oh, you went long ZB at 06? 121.06? Well, that's not too bad for today. I mean, I had kind of thought coming in today, dude, I should just come in and just go short yield set from the very beginning, right? I guess I would be sitting pretty right now if I had done that. But of course there was news and everything, and then I'm like, well, I'm not going to chase that one. It's kind of funny, isn't it always the case that, like, when I'm too cautious, I don't want to chase it, and those are the ones that just keep going? So was the one yesterday? Well, I think yesterday was because I felt like I was already on tilt. But, you know, I didn't chase it yesterday, and that one would have been great. Although it is often the case, like, if we do get a pullback, I'm gonna bet you they come back to like this 26.5 area. That's the way it tends to go. Jeez. I'm watching this action and I never know when I need to get out, and it stresses me out. Well, normally we would get pretty clear signs that they're pausing, but we haven't really been getting that, have we? One thing, so something I think is really, really weird about this market, and I've never seen this before. Look at the market depth on the offers versus the bids. So when I look at the offers, almost every price is over 2,500. 26, 27, 29, 31. And we've been having trouble getting like 3,000 contracts in liquidity on the treasuries, right? But then go back and look at the bids, right? Well, there's a few prices below us where we got 2,000. But then below that, it's back to like 1,600s and everything, which is like very, very light liquidity. The bids are like super low. It's like they don't expect it to come back here or anything. Like nobody's bothering to put the liquidity down there because they don't think it's going to get back there. Lots to sell, but no rush to sell it, I guess. It's a very extreme imbalance. Not something I've seen before. But this move is just overall is a little wild. I'm not entirely sure how much of this is like the dollar collapsing here. Yeah, it means sellers expect higher prices, probably. Well, it might. I mean, it always shifts around, but I don't think that many people are expecting it to come down here, and they are up here, and you know, maybe they want to take it off here. They don't know, but you know, they're all long, and they're not looking to take on more contracts necessarily. They're just going to take offers. That may be part of why it's moving the way that it is, though, because it's kind of looking like if you want to buy it, you've got to hit it with a market order. Like, you're not going to get filled on your limit order, even though there's not very many contracts in front of you to do it. As she goes, type of trade, maybe I should have kept the long. Just really, in this situation, it's like anybody's guess. Like, look at the cumulative delta on this. Very unusual move. So through this whole shift from 29 up to 111 even, the cumulative delta in the treasuries have basically been flat. It seems like there's been a decent amount of trade, but it's been both ways. So I guess probably there has been some profit taking against it, I guess. Might be what it is, but it seems to me more like that the meta orders aren't active in the treasuries right now, that we're moving up more on the dollar selling. That's my take. And that makes it really hard for me to know when to take the profit, because if I'm not getting strong flows in the treasuries, then I'm not going to get those strong signals that like this is a pausing area and so forth. This kind of brings me back to let's make a note card for it. I got these newer note cards and they're bigger and the wrong colors, and I don't like it. And I should just go and get a new one, but dollar index stylized behaviors. There's got to be something on the side of the dollar that we can kind of use to help us in those kinds of situations. Yesterday I got completely destroyed because I was unaware of the news. Today I watched the calendar first, then I turned the charts on. Kind of dumb of me yesterday's, but oh well, we're learning. Oh man, I'm so sorry. Yeah, first thing you've always got to do is, what is the news for today? I mean, really, that's why on Monday we kind of go through and we're like, okay, what are all of the major news events this week? Although as of late, there have been many news events that I thought were like no big deal and ended up being a huge deal. So now it's 111 goes bid, new high again. I guess in terms of yield, it hasn't been that big. I mean, from the news, but like just this last little bit that we've been watching, they've taken like another basis point or something. But it has not stopped at all. Like, there really has not been any kind of meaningful pullback whatsoever. There's somebody puking right there in the micros. Look at those. So back here at 31, that was there before, wasn't it? But it seems like that little cluster there has kind of firmed up a little bit. I'm not going to do it. I'm not going to buy the high. I refuse. Keep going. It'll go up all day and I'll miss it. But I'm not doing it. Let's come over. Zero Hedge should probably have a story about that GDP news. Let's see if there's kind of some stuff hidden in there that I'm not aware of. Hurricane Ida makes landfall on Florida's Big Bend as a Category 3 storm. Oh, wasn't it supposed to be Category 4? Well, I don't have anything about GDP, but they say ADP employment reports signals slowdown in labor market wage growth slows dramatically. That might do it right there at 01. If you're watching it from the news, it's a historic storm that killed us all. Right? Like, it doesn't... It seems like the news is giving this particular storm a little bit more... Well, I think I know why, but it seems like they're giving this storm a little bit more press coverage than they usually do. It's not even raining where you're at. Wow. So here's why I think they're doing that, Uzi. Because it's an El Nino year, you're likely to get stronger hurricanes. And we're still fairly early into the season. So I think the reason that they're doing this is so that they can continue to have heavy press coverage over the next few storms. It's a strong storm, but it's moving fast. Storm surge will suck, but that's really it. Octavia says I'm going for the hero trade. Well, there was a slight note at 01, but they didn't really do much there. I am definitely okay. I'm gonna do it on the sim account. I'm just gonna do a small one from here. I don't want to do the hero trade, but I do see this volume node kind of forming, and I want to see if I can take if it works for me. That'll kind of give me a little bit of a clue. If I can use this sim trade as like my feeler, that will kind of give me a clue of what's really going on under the covers here, because this trend has been a little wild. Like, the original move was from 21 to like 28. So like 7 points. Now we've gone from 28 to 02, which is another 7. So this trend has continued. I'll take the one there and the other there. Seeing the liquidity weak there at 01 is good. They did tick back up though. It's going to take a lot of new buyers to chew through the offers. Yeah, well, especially if they don't pull like we have just seen through here, right? Like, the supply has definitely kicked in all of a sudden. Like, it is a big change in terms of how much is trading on the offer above 111 even versus below it. Okay, did work. Didn't even get an adverse excursion. Now, that doesn't necessarily mean that I want to take a trade over here in the micros. I could try the hero trade in the micros. That would be really risky. it's more likely that we go maybe as low as 31 and then build some volume out here again. Like, that's kind of the signal that I'm getting, is the meta order is over, not necessarily reversal. So, we can take it from the last 30 minutes. That's the other thing. That was a really long meta order, right? That was a meta order that went for a full 30 minutes. So I think that like a reversal is probably not in the cards, but a little bit of a pullback, maybe, yeah. Okay, big order just got stacked at 30. Although that didn't trigger my thing, did it? Do I not have the sound on for this one? Yeah, I have it on for the equities, but not for the treasuries. That's interesting. Let's turn it on for the treasuries. Well, it was on there for a second, then they took it back off and they went back up to the highs. Trading a lot there again, though. I'm kind of concerned that we've already missed all of the opportunity, you know? Like, I had the opportunity to make it probably 2 basis points there. I'm concerned that if I get into any kind of a position from here, that it just doesn't go anywhere. It's now 30,000 net. It's a massive, massive shift, though. We must be triggering some CTAs now, too. I mean, if the stuff that we've seen this whole time wasn't CTAs to begin with. We voted to raise taxes on property owners, not renters. Why did our rent go up? Oh my gosh. Let's see. So I saw this post yesterday on Reddit where they were complaining about how to get into an apartment, they had to have the first and last month's rent and the deposit, and there was like a application fee too. And so it was like $3,000 to $5,000 just for them to even get into an apartment. And I was like, wow. But you know, if you make a bunch of laws that make things difficult for land owners, for renters, what do we call them? Landlords. If you make laws that make things difficult for landlords, it doesn't help you. Because that just means that the landowner has to, the landlord has to charge that much more to make up for the risks that he puts on. You know, when they make it so that, like, you know, any renter can try and like stay in 3 months past when they're supposed to, and make it really hard to kick them out and all that sort of thing. Yeah, what do you think the landlords are going to do in response? Okay, So there's been 10,000 that have traded at 0.2 Let's just note that 10,000 is like about standard. It's not like a ton. It's still kind of pushing. We're still seeing market orders come through here. I'm not seeing the dollar move with that. I'm not seeing the Japanese yen move with that. So that looks like a little bit of extra squeeze there in the treasuries. For that one, at least. Man, you're right, Uzi. I am just seeing so much stuff on Twitter about Hurricane Ida. That is like their big thing. Because there have been other storms that were like relatively big. Like, wasn't there like a really big one last year and they basically like just scoffed at, like completely ignored it? They do it every storm. Well, I'm sure it's good business for them. Like I'm sure that during those times that there's people. I know that would be me. I would be I would have it turned to the Weather Channel and just be watching everything that I can. People want it to be terrible. Now that's, you might be right about that. You might be right about that. There's definitely this group of people that, if they get excited anytime they see an extreme weather event because they think that it supports, more climate change agenda stuff. But, this is, it's a very interesting topic that I am not that interested in. Like I learned very, very early on that like if you want to get involved in the whole climate change debate thing, like that's a tough space because number one, there is just so much to know and so much data and so forth, and like people contradicting each other, and like I in finance, for instance. The one that drives me crazy is everybody says Americans have maxed out their credit cards and have $1 trillion worth of debt. That means that the economy is going to explode anytime soon, right? Well, no, because debt service payments as a percentage of discretionary income is still relatively low. It's basically what it was before the pandemic, and before the pandemic, that was like historical lows. Okay. So there's actually a lot of room for Americans to take on more debt. But it's very easy for me to like debunk that. You just go to Fred and show them that metric and they understand, oh, okay, I heard 1 trillion and that sounded like a big deal. And that's why, I didn't understand what all of the metrics that were out there, and I didn't get the full picture. And that's why I made the mistake. And so it's very easy to explain to people the problem with that, right? But when you get into climate change, it's like, well, people show you this one chart and it shows that like, oh, the change in climate change is like extreme. But then somebody else will show you this other chart that shows that like, oh, it's no big deal. And like, do you ever get like one debunking the other's chart? Right? Like, I never see that. So that's the first thing. And you have to know a lot. And then on top of that, there's a large group of people that are very much invested in you not investigating it. Right? They don't want you to go and know this stuff. They want you to just trust them, which is why I just don't touch it. Like in my opinion, like this thing, the GOP debate. Do you believe that climate change is driven by human activity? I'm agnostic. I don't care. It doesn't matter. Like, to me, yes, we should try and reduce our impact on the environment. We should be careful about the emissions that we're putting out. We should be careful about the pollution that we're putting out. And we should have policies that encourage companies to be responsible with those sorts of things, okay? The problem is that all of the policies that I'm constantly seeing pushed on these sorts of to try and deal with these supposed problems are terrible policies. Like, they're terrible policies just from the perspective of what they're going to do to people, especially the poorest people. They're terrible policies in terms of, they're not really going to have any impact on the problem at all. Like, all of these policies are basically, as far as I'm concerned, reduce people's incomes, reduce people's freedoms, and not solve the problem at all. Humans generally believe they control the climate of an entire planet. Worse still, they believe their politicians can fix it. Well, yeah, so the first part, like, here's the thing, is like, I think that we have a considerable amount of evidence to suggest that at least on short time frames, we do influence the climate of the planet. We can actually influence the climate considerably. So, like, the whole thing with they changed the way that ships emit their emissions when they're going across the Atlantic, and that resulted in less cloud cover, and that has affected weather patterns. So that's one example. Cloud seeding. I mean, there are areas of the world now that like are just like outright cloud seeding is a feature of living there because they're in the desert and everything, right? So can we have short-term impacts on the climate? Yeah, we can. And I think the kind of the problem, I guess the scary thing that we're kind of running into, or we're starting to realize, is that we have impacts on the climate more than just our carbon emissions, and we're like not even close. We're not aware of the impacts that we're even actually having, right? But to believe that we can come in and like now engineer it, and that particularly that the politicians can do it, is just the most ridiculous thing, right? And that's why I go back to, like, the policies are just bad. Like, the policies that are being promoted will not help anything. They won't. Like this thing, what was the news story yesterday? The UK concerned about, emissions, and they're telling people, well, just don't heat at night. Yeah, okay. So how many people are going to freeze to death because you're telling them to not turn the heat on at night? Because I'm telling you, it will be some. Do you know that, like, the death toll during a heat wave in Europe is significantly higher than it is in the United States? Because in the United States, pretty much everybody has air conditioning, and that's not the case in Europe. Okay. Like, there are costs. There are human life costs, and there are monetary costs, right? Is it really that, or is it that you're concerned about the price of natural gas? Be honest. Be honest. Because, listen, it doesn't matter if you all turn your heaters off at night, okay, and you save all of this amount of carbon that goes into the air that, doesn't go in there. It doesn't effing matter, because India and China are pushing out so many carbon emissions that it just dwarfs any kind of stupid little saving that you as a consumer can do. Any policy that you see in the West that is essentially designed to reduce your carbon emissions, it's total BS. It's total BS, because it makes no dent in it whatsoever. The only way that you're going to make a dent is if China and India does something. And particularly with their industries, right? The people aren't the problem. It's big businesses. It's private jets, boats, these things. And then they're telling you, well, you need to not heat your house as much. Bullshit. You're lying. Like, you're just objectively doing something that's just objectively terrible for people that will have absolutely no positive impact on the environment whatsoever, because you're not actually addressing the real problem, which is the massive amount of emissions coming from third world countries. Yeah. It's like people who recycle, they can see fill their bins each week filled with plastic water bottles, bins that get picked up by diesel trucks, processed at facilities powered by natural gas, and shipped across the planet to be burned in Southeast. Yeah. Recycling is, in many instances, is straight up a scam. Yeah. Like, it requires more energy to recycle the things than it does to make them new. There was a good episode of bullshit about that. You can't tell me that it's not just about control. And that doesn't make me a climate change denier, right? Because what I said I'm agnostic. I'm just looking at the actual policies. And what are the impacts of the actual policies? And I tell you, they are, things cost more for you, you have less income, you have less freedom, and the climate is not affected at all. Problem is all the capital that's lying in wait with the renewable energy stuff. Well, I mean, I'm not so concerned if people want to invest in solar panels and stuff, but when you start going and making these policies that restrict people's freedoms to try and, you know, influence their behavior in a certain direction, then I have a problem with it, right? It just goes back to the whole COVID thing, and it just like, I don't understand why people have a hard time getting this, because if you go and you look at, you know, the places that did not implement COVID mandates, they had lower excess mortality. So the reality is that freedom actually results in a better outcome than trying to force people to do things. That the people in that country still did the things that they needed to do, you know, to protect themselves from disease, and they had less excess mortality because they didn't have all the mortality from, you know, forcing people to be home and forcing things on them. And I believe it's the same thing with, you know, climate change, that people will largely do the correct thing if you enable them with the information and you actually give them good quality information, right? But in this case, again, it doesn't matter because it's China. And look, they don't care. They're not going to pull back on any of that until they're like the biggest economy. Like, they're like, oh, let's be number one and dominate the world and have everybody under our thumb first, and then maybe we'll reduce our carbon emissions. Maybe. And the West is just like, okay. Freaking idiots. Or you look at places that didn't run out of the gate treating COVID patients by putting them on ventilators. That one is interesting to me. That I think that I need to have a little bit more information about that one before I would go into it, though, too deep, right? Like, I can only say that we definitely have some data that, like, once you put somebody on a ventilator, that they pretty much never recovered. They pretty much never recovered after that, and so they were much more reluctant to put people on ventilators. But the other side of it, one of the things we got to remember is that initial first wave that came through, like especially the one that hit Italy and so forth, was a different beast from probably the one that the rest of us caught, right? Because those other variants were, I mean, that's what tends to happen with the disease, is the contagiousness of it goes up, but the severity of it goes down. That's the way that they tend to evolve. Because if you just kill the person, then you're not able to perpetuate very far. Okay, so there's 111 again. We're still just kind of getting like, it's just resting and building out volume, and it's not like a real meaningful pullback. We beelined it into the apocalypse. Well, so one of the things that I do that's I think so weird is I always have to have like some sort of a thing at the beginning to say, well, here's the thing. This is the thing that bothers me about it, or it's not. I should just say the thing, but okay. Like, the CDC came out and like gave us the information that looking back on it is just so bizarro to me. Like, I was up on like every little development. I was reading all of the studies that were going on about it. We were tracking the COVID because it was like relevant to the market, right? And then I go and see these localities, whether it was entire states or just individual cities, going off and doing just absolutely insane things that were not backed by the science in any way whatsoever. And any time that anybody stood up to say like, whoa, hold a second, that's not justified because of X, Y, and Z, and then you were called like a denier and a conspiracy theorist and all this shit. And it's like, no, I actually read this study. What are you doing? These people actually, were these policymakers actually paying attention, or was this all just like a... it was such a bizarro world. Today you just get prednisone. Be careful with prednisone, man. That stuff can mess you up if you're on it too long. Nothing, well, I wouldn't say that nothing we've done was backed by science. Like the mask one, that's the most difficult one. So now the mask thing is kind of hits on and kind of an interesting sort of conundrum that you often have in science, because you can come in and you can say, okay, if somebody has the mask on, it reduces the transmission by X amount. If both people have the mask on, it reduces transmission by X amount. And they can do all of these studies showing it and showing how effective the masks actually are. But that's different from, okay, if we actually force everybody to have masks on, does it affect how much transmission there actually is, right? And the last study that I had read was basically that it didn't. Or that at the very least, they're having a very, very difficult time proving that it had any kind of a positive impact. And probably the reason is that even though you're reducing the viral load that you might be getting by wearing a mask, that there's so much of it out there that you catch it anyways. That you're reducing it by so much, but there's so much of it that you still catch it. And yet, there's still these people that you know, insist that everybody should be wearing masks and want to bring it back. They want people to just have to wear masks forever. It's crazy. It's like super crazy stuff. If only we locked it down hard. Did you really hear that from friends? You're probably a lot more triggered about it than I am, because it was not like that in Utah at all, okay? Utah did what I think was the wise thing to do, or what ended up being the best policy. Like Utah was one of the states that fared the best during the pandemic, both in terms of like minimizing the impact to the economy and reducing deaths. And what did we do in Utah? Well, we did have mask mandates, but we shut down, quote unquote, for the 2 weeks. And then, you know, for that month, things were still definitely restricted. And then after that, they went back to normal. Now, things were not normal. But all of the abnormality after that was mostly either self-imposed or imposed by the businesses. And so the impact that it had on us in Utah was minimal. And I didn't have these sorts of things because everybody over here was pretty much on the same page. Have you ever had Windows go to sleep on you randomly on a fairly new PC? Some say it's video card drivers. What do you mean by it go to sleep? Like it actually goes into sleep mode? Or are you saying that you're just getting intermittent pauses? So one of the first things that I do when I get a new computer is I check for DPC latency spikes. After power saving mode, you're on a laptop, aren't you? You're on a laptop, aren't you? So with laptops, you've got to be careful with or no, like the power saving mode in general, because basically the way that power saving modes work is usually they put your processor into a power saving state so that there are times where it's just not as active, and then that can result in those kinds of like intermittent pauses. So like on the power settings, I would always just go in and turn it to high performance mode, because high performance mode is basically like normal mode. Okay, just the video goes off. So it's like the video goes off and then it comes back, but like everything is still up and is fine. I don't know. I can't explain that. But one of the things that you'll get with like DPC latency checker is it can detect if there's a problem with your drivers or if there's like a real problem with the hardware. Sounds like you're experiencing a problem that is beyond my ability to really do a whole lot to help you, especially just over the stream. Well, you did overclock it. Well, you might want to return your BIOS back to like, yeah, factory settings and see what that does. Well, we went as low as 31.5. Here's the S&P 500. I should have done a commercial break already. We're a little bit past that. But here we're gonna have the ES go again, so let's see if they buy it again today. I mean, rates went lower. I would expect the S&P 500 to like it again. But you never know. There's a certain point at which they're like, maybe we actually are going into a recession, right? Right now it's like soft landing, yay, but there's a really fine line between soft landing and recession, okay? And it could switch over to recession real quickly. You know, there's definitely people out there saying that there's going to be a recession again. Like Zero Hedge is definitely in on the, yeah, recession is coming. Yep. Oh, interesting. So let me read the Zero Hedge story on the Q2 GDP, okay? Another data point, another major downward revision lower. In the past month, the Biden Department of Goal-Seeking stuff higher before quietly revising it lower the next month has been busy after slashing jobs, jolts, new home sales, housing starts and permits, and industrial production. Moments ago, it took the machete to Q2 GDP, which in the first revision of the data was cut to 2.1%. Down from an initial red-hot print of 2.4%, which turned out to be nothing more than some overzealous political activist Excel adjustments and well below the consensus estimate of 2.4. The revision, according to the Bureau of Economic Advisors, which, my gosh, they're being really super biased about this one because they think that they've got like something to push here, but I digress. We care about the data, right? reflected a smaller decrease in inventory investment and an acceleration in business investment. These movements were partially offset by a downturn in exports and decelerations in consumer spending and federal government spending. Imports turned down. In short, everything was uglier, which is funny because it was the imports and exports that was it explained for the hot print that we had before. I'm not going to go down through like all of the crosstabs and everything that they say. BEA reported corporate profits decreased 0.4% at a quarterly rate in the second quarter after decreasing 4.1% in the first quarter. Profits of domestic financial corporations decreased 12.1% after decreasing 2.3%. Profits of domestic non-financial corporations increased 0.9%. Needless to say, this is a far cry from the rebound in corporate profits that companies themselves reported in the various GAAP and non-GAAP metrics, which is to be expected in a world where there is now an uncrossable chasm between economic data and its government fabrications. And now we wait for the Atlanta Fed to slash its quarter 3 GDP now estimate from 5.9% to 1%, because at this rate, the final quarter 2 GDP revision next month will print well below 2. What is the rollover date for the treasuries? Okay, so let me explain to you. I will show you first how to look this up yourself, okay? So if we come over here and we say ZN futures, and then we're going to get the CME 10-year T-note overview. And then when we get to this page, there's going to be a specs tab. And then we go to the specs tab and we want to know settlement procedures. So now we come into settlement procedures. Where is it? Oh, it's not settlement procedures, it's delivery procedures that we want. Deliverable. No, maybe I'm on the right spot. Come on, where is it? That's where I looked and I couldn't find it. You know, it's always they're always kind of changing the way that stuff works too, which I kind of find frustrating. Like the website is constantly changing. Okay. It's not there, but I can still explain it to you, okay? So if I open my calendar up over here, basically first call is like the first of the month, the first trading day of the month, which in this case is the first. And basically rollover is 3 days before that, right? So if you look at the first, then you go the 31st, the 30th, 29th. Yesterday was rollover day. And you'll find that pretty much all of the volume is moved over. Now, you could still trade on the old contract. I wouldn't recommend it, but you could still trade there. You're not going to find very much volume there. Your broker might prevent you from trading it. Okay? Because now at that point, you are like callable. It's like, they always do it with the position that's been held the longest. So you're very unlikely for it to actually happen. But it's still a possibility that they'd say, okay, you now have to deliver a $100,000 worth of treasuries, right? So 3 days before. So it was the 29th. That's how you find it. Now, I was trying to show you over here because typically you come in and you look and it tells you where those are at. And for some reason, it's not. Okay, so let's say ZN Treasury Delivery Procedures. The Treasury Futures Delivery Process. 8th edition. Timetable 6. Okay. Each Treasury Futures contract delivery is accomplished through a 3-day process in which the CME clearing receives notification from a short clearing firm of a short position holder's intention to make delivery and then matches the short clearing firm to a long clearing firm who becomes obligated to accept delivery. The two clearing firms exchange information as the Treasury securities that will be delivered by the short clearing firm and the invoice amounts that will be paid by the long clearing firm, and the delivery is fulfilled. Okay. So it's a 3-day process. Intention day. On the first day of this process, intention day, the owner of a short position in an expiring contract instructs their clearing firm that they intend to make delivery. Okay. A short clearing firm can declare intent to deliver at any time from the second business day prior to the delivery month, which is first intention day. Okay. So the delivery month is September. So the first is the first trading day in September. You get 2 days, right? So today is intention day. That's why yesterday was the rollover day. Yesterday was the day that we all roll, because you're not forced necessarily to roll over. But if you don't necessarily want to get called, then you do it 3 days before. Okay. Now here's the thing, and because people were asking me about this yesterday, okay, it's different for every instrument because different instruments have different procedures and so forth, right? So you're going to have to go and look this up for the instrument that you do, and as you do things, you kind of pick them up. But here's the key thing. Memorize it. Memorize, how do I calculate when the rollover is? Okay, so for the Treasury, it is 3 days before the first trading day of the contract month. So if it's the September contract, then 3 days before the first day in September. So I go to September 1st and I go back 3 days. 1, 2, 3. The 29th is the rollover day. Memorize that. Oh my gosh, Francesco, you're asking a really in the weeds question. Okay, let's talk about this. Okay, so what is the actual underlying of the Treasury futures? I remember reading something about a fake bond with a 6% yield. Is that correct, or am I missing something? So kind of, sort of, but not really. Okay, so first of all, what is the underlying? If you come back over here to where we were at. Oh my gosh, gotta go back. Okay, right here. So if we go to the contract specs, the contract unit is face value at maturity of 100,000, and there's listed contracts. No, that's not it. Okay, this isn't the best place to look at this. I will show you where we will look at this. CME Group interest rates tools. Okay, so if we go to the tools and we look at the Treasury Analytics tool, I believe it is. And wait a little bit for it to load up here. Take a drink. treasuries are getting a little bit more of a pullback that's a little bit too dramatic, but it's already coming back up. Okay, so then I can come in here and I can say 10-year. I click on deliverables, 10-year. Come on. Okay, so then down in here, the deliverables, these are the treasury QSIPs that you can deliver. So a QSIP is just an ID that uniquely identifies it, right? But so they're saying, okay, the treasury, the 7-year treasury that was issued in July, that's included in the contract. You'll notice, by the way, that the delivery years is actually closer to 7 than it is to 10. Okay, but that's what it is. Okay, those are the ones that you can deliver. So if you were holding a treasury contract that short, and you're set everything up to deliver, then what ends up happening is you have to give them $100,000 worth of this particular treasury QSIP. Okay, that's what the deliverables are. Okay, now here's where it gets weird. Okay, is that that treasury will have a certain, price and yield and all these. So remember that, like, the coupon that you get 2 times a year, like, that's set at the time that they auction it off. So that's that certain thing, right? And then the value of the bond adjusts based on that. Okay, and that's where you get, like, the yield to maturity, which is, if you bought it right now, what, based on the price that you get and the fact that at the end of it they give you your money back, right? Because they give you your last coupon payment and the 100,000, for buying the original bond. Sorry, stick with me here. I know this is, like, super in the weeds. I warned you it was super in the weeds, okay? But that's how you get the yield to maturity, okay? Is how much will I make per year if I hold this for the rest of the 7 years that this bond exists before it matures, okay? Yield to maturity, okay? But is that how they determine what the price is? No, actually, it's not. So what they do over here in the treasuries is they assume, like you had said, they assume it's not 6%, I think it's 4%. They assume a 4% yield. And they say, okay, if this treasury yields 4%, then what is the corresponding price? And that's how they get this 110.30. Does that make sense? Okay. That is where the treasury conversion factor comes from. That's how you convert from the price that you would see in the cash bonds to the price that you're seeing on the futures. Because the futures assume a 4% yield to give you a price, essentially. It's weird. I forget why they do it that way. I'd have to pull out my notes and dig down in a little bit. But the gist of it is, if that was all, like, way too complicated, is that if you need to do the math on these sorts of things, then you would come over to this treasury analytics tool, and this gives you all of the information that you need to know. Okay. But you're right in that, okay, it is a deliverable, but the price and everything that you're actually seeing on here is not like the actual price of what you would be buying it as a cash treasury. It's a little bit different because there's a conversion factor, essentially. Because the treasuries assume a 4% yield to price them. And why is that? Well, because there's different QSIPs, right? So you can see here, the yield to maturity on all of these is slightly different for each one, right? One is you're getting 4.14, on one you're getting 4.22. So there's actually an 8 basis point difference between the best yielding coupon and the worst yielding coupon, right? Now, somewhere in here, do they have it on this one? Oh, right here. Yeah, okay. So one of the things that's kind of interesting is, okay, because there's so many different QSIPs there, right? I'm going to make more money if the one that I'm delivering is the cheapest, the one that's giving the lowest yield, basically. Kind of shifts, but based on where we're at. But right now it's on the lower end here. So if I can do this one that was like November 15th, 2021, okay, if I had those, I would make more money from delivering those than from delivering this one. That's why it's called the cheapest to deliver. That's what this CTD up here is, cheapest to deliver. And so the treasury tends to follow what the cheapest to deliver was, essentially. So that's the other side of it. If you really, really want to dig deep into this, the CME has courses, and they've done like live webinars on this stuff where they do the deep dive on all of it. But it's stuff that we as speculators don't really need to get into. If we wanted to really play the full game, where we're like buying the actual treasuries and then selling the futures against them and making money on the basis difference between the futures and the actual treasury, and then delivering the actual treasury at the end, then those things would matter, right? And I guess the other thing that would make it matter is, oh, okay, the ones that you actually deliver are more like a 7-year. So even though they call this the 10-year, it's actually the 7-year. And that's also why you'll see it like, oh, okay, if the 5-year really went up and the 10-year kind of went up and the 30-year didn't really move very much at all, and then I come over here and I look at the micros and I'll see that my 10-year yield didn't really move at all either. Well, why was it that my 10-year yield acted more like the full 30-year treasury instead of the full 10-year treasury? Well, because this is not actually a 10-year treasury, it's a 7-year treasury. And it turns out that a 10-year treasury acts a little bit more like a 30-year treasury than a 7-year treasury, even though it's closer to 7 years. Then that matters, right? Because then you're basically, the difference in the yield curve kind of results in this odd behavior that you can sometimes see here in the micros. So, how many people did we lose from the stream while I was explaining all that? Oh, you're still here. You're all still here. Guys, give your bravo. Bravo. I went into something like super in the weeds that is not necessarily my forte, and you listened through it. You deserve kudos for that. But you're right. There is like an assumed yield on the treasury. But that doesn't have anything to do with... Yeah. Anyways, I explained it. I explained it. There's a 5K bid in ZT. Kind of looking around to see, do I see corresponding offers anywhere else? I don't think I do. Is it really close? Is that why the Ultra 10-year and the Ultra 30-year bond exist? That is exactly why. Is so that they would have a futures instrument that was actually more like a 10-year and a 30-year. Now, how the 10-year somehow eventually got to being more like a 7-year, I don't know how that happened. I don't know what the deal is with that, but... So let's come back here. We do have some numbers at the top of the hour, right? Pending home sales change. I don't know if that one will be too big. That's usually not like a huge mover per se. But never know with this market. There's only an estimate for pending home sales change month over month. We're looking for a reading of negative 0.95. Overall, I think I would rather be going long, and we did get a little bit of a pullback. Actually, shall we do a little bit of math here? So here, if we go from here to the top, and we say, what is 60% of that? Let's see here. Oh, levels. Enterprise levels. Oops, wrong one. Wrong one. %, retracement. That would have put us at 30. So I guess if I really wanted to be involved in this, I could have gone long at 30. So it did touch that. Maybe up a little bit, but going into news, which we don't necessarily want. So. Well, just before the news, I guess I should probably put a commercial in here because YouTube wants me to do that. Plus, you guys, big portion you already left because it was a good stopping point. So let's do that now. I'm just poking around a little bit, seeing if there's any other news or analysis worth reading, but it doesn't look like I see too much. It's been a relatively quiet day. Some of the social media front. There was some points yesterday where it was just bonkers, right? I haven't taken one today, no. I guess I really should have tried trading off of that initial news when the GDP was changed, but I was like way too afraid to chase any of that. This is just a really wild and crazy move because we could have feasibly have gotten in at like 26.5, right? I'm also kind of recovering from yesterday a little bit. That really kind of like scared me. It wasn't an unusually large loss. It was 2 contracts, 15 ticks. So that was, like a slightly larger than I would want loss, but it was okay still. Like that's within the range of like, I can take a loss like that. It's okay. But the way that it happened and the way that it happened so fast, like really was quite upsetting. So it's not necessarily a bad idea to try and get our, you know, like our chemicals and everything rebalanced for me. But, you know, I was stubborn through that whole thing. I was like, I'm not going to chase it. I'm not going to chase it. Well, the points at which I was like, I'm not going to chase it were all points at which I would probably be break even or even underwater if I had actually traded. So I think it's the right thing. Same here. I missed the initial move on the bone, but I managed to get in on a pullback. Well, it was the thing was that for me over here in the treasuries, it never really actually pulled back until it was over. So it was really frustrating. Yeah, 2 paper cuts. Well, you know, the market definitely wasn't expecting a revision like that, right? As I was saying before, I don't want to kick myself too hard because clearly a large portion of the market was taken by surprise from that. But that was exactly the kind of situation where we should have the advantage and I just should be able to take advantage of it, and I didn't. And I do kind of wonder, going back, was it just because I had already taken that one loss that I really hated? I don't understand why I didn't try trading that news as a continuation, because it really did keep going. It's been like, for all of the sudden, for some strange reason, I'm really reluctant to try and take the continuation trades on these when I know that they probably should continue. I'm much more detached about the outcome of my trades. Yeah. Well, I feel okay. I'm not sure that I'm completely on. I felt really stressed in the evening yesterday because my kids were just not behaving. My older toddler wants to throw things at his younger brother all the time. He thinks it's a game, and he does this thing where it's like if you get really mad at him about it, he'll just keep doing it. He's like, it's like there's no. Well, I think that it's an impulse control problem, but to be honest, I can't be entirely positive that he understands that it's not okay to do that. Like, he just doesn't understand context. You know, you roughhouse with him, and then he thinks, oh, so we roughhouse all the time with everybody all the time because it's fun. He doesn't realize that, no, your younger brother is not strong enough to roughhouse like that. You can't just throw blankets on top of him. You'll just suffocate him. And, you know, so I will, like, yell at him. Grab him. Really make, like, a scene out of it. To be like, okay, if he's autistic, then that means I can't be, you know, I need it to be really obvious. I'm angry. Can you see I'm angry? Because his issue is going to be, he doesn't see the social cues and everything. Well, it seems like it does kind of, because then he'll start crying at the very least. But my wife, never lets it go from there. Like, she's like, oh, okay, I guess I need to come over now and start watching him and, you know, ensure that he doesn't do anything. And so I never really get the chance to see if he really got the message or not. Being 20 with no children has its pros. So the liquidity did pull a little bit. The number was pending home sales change month over month. Instead of getting a negative 0.95, we got a positive 0.9. So that would be a negative. That would, on average, tend to move us down, but the market's kind of yawning at it. Let me tell you something. Yeah, being 20 with no children has its pros. But you know what? Being like 40 with grown-up children has its pros too. And, you know, I guess people make their choice, but I think that there's going to be a lot of millennials that regret not having the children early. Because basically what happens is you can party hard in your 20s when you're poor, Or you can sit down, you can have the kids, you can work hard, etc., save up, and then party hard when you're in your 40s and you actually have the money. Just saying. I'm just saying. Your pick. Well, what should we do here? I feel like I could definitely pull like ticks out of this market, but I really want to take one with the micros, and I'm just not seeing the opportunity. And kind of looking for this spot where like the price is good and I'm seeing the liquidity kind of in my favor too, and it's just not happening. Guess it depends on who can party hard with you at what stage of your life. Yeah. I really don't. So I remember when I worked for the bank during the first month where you're doing the training in New York, and these guys, like especially the people that were from the UK office, because everybody comes to New York no matter which office you can be in. They were like functioning alcoholics, man. We'd go out drinking every night, and they would party hard every night, and then even come in late to work. Nobody cared. Nobody cared. And I remember some of them spending big amounts of money too. Like it would go into the bar and dropping $1,000 on drinks and stuff. Like what? Saved it all. Saved it all, and that kind of helped get towards putting me in my first house. See, on one hand, I could say that a lot of the financial success that I've had is luck, but there was strategy behind it as well. You know, like I was saving to get into a house early on because I knew that housing would be a problem. There was everything on the financial news has been talking about this being a problem, so going back to like 2009. So I knew that I wanted to get into a house as soon as possible. I knew that, well, you know, I was willing to get into a house and be house poor, knowing that over time, my ability to negotiate a higher salary would improve. And that is what happened. Like, I remember when we were moving over to this house, like, my wife was a little concerned about it, but I was like, well, number one, I don't want to continue living here because you have no AC. It's very uncomfortable. And two, I'll keep making more. And that's what happened. Is, you know, we switched over, kept making more and more and more. And, you know, it went from being something that was like 50% of my income to less than 20% of my income. With smart thinking? Well, I don't know if I necessarily consider it smart. It was just, I was informed, right? Because I wasn't the one that figured all of that stuff out. It was just, I knew where the economy was going and what you're supposed to do in response to it. That's where, you know, being informed in the markets, like, listen, you gotta realize, and this is the thing about yesterday, as I was like negotiating with myself and dealing with my emotional problems over having a trade that I was really unhappy with. Well, that was a unusual situation. We want to excel in those kinds of situations, but sometimes it's going to happen. And at the end of the day, we have to keep in mind that what we're trying to do here is kind of impossible. We are really trying to overcome impossible odds. That's just what it is. If you're going to get into this doesn't mean that you can't be successful with it, but you just got to realize that's what you're up against. Otherwise, because if you don't, like, it requires a certain type of strategy and approaches and so forth to overcome impossible odds, as opposed to something where, like, you know, everybody that tries hard at it will be successful. It's just a completely different game, you know? And what we're trying to do is quite impossible. So Is it like, you had a bad trade yesterday, you're in a bad drawdown, should you just give up? Well, no, because I love doing it. But I'm not. I'm at this point, I'm unprofitable this year. I think slightly, because, you know, we did make like 200 earlier. But commissions and everything, all that, you know, you're down 200 basically. So should you quit? Well, no, because you enjoy doing it, and you have to realize that, like, well, what you're trying to do is impossible. So you don't, you know, should you get all over yourself? I'm a failure, I'm stupid, all of these other things because you had a bad year? No, not if you enjoy doing it. You're always going to get better at it. And what you're trying to do is impossible, you know, kind of impossible anyways. But then the other question is, well, then aren't you just kind of wasting your time? Well, no, because the money that I've made from understanding what the market was doing and being able to strategically place myself in terms of what I do with my house, what I do with my career, what I do with everything else, invaluable. I mean, you're talking about a difference of millions of dollars over the course of my life, probably, when all is said and done. Not from the trading, but just from the everyday decisions that I made that were better informed because I was trading. The market is going for the big bit. At what price is it at? Or how many ticks away is it? I don't think I'm gonna pull the 2-year up, but four ticks away. Now that is curious, actually. So it's probably at roughly the same place corresponding to this big bid at 28.5 that has been stacking and pulling for the last like 10 minutes. Well, let's say there was a stack and then a pull at 28.5 about 10 minutes ago. Oh, now Alex says he's short Xian. That's interesting. But if you're short, Alex, what price did you get? Because it's a tough short to catch, you know? Like, that could be a very difficult trade to work out profitable depending on which price you got, right? I mean, if you got it at like 11.3, then like, wow, but... Now, here's the other thing that I've been thinking about yesterday, though, is like, I feel like there was a little bit of emotional turmoil for me. Yesterday, I remember being later in the day and trying to do some Pluralsight learning stuff because they want me to do 20 hours worth in my job. And I was like having the headache, and it was like incredibly difficult for me to focus. So I think that by that point that day, I had already basically been burnt out. But I'm looking at that and I'm like, you know, Seth, maybe we just do not have the emotional profile necessary to like manage a hedge fund, you know, because if a trade like that gets me all out of whack, what is a bad day in the market for a fund gonna do? I don't know. I'm not gonna think about it too hard. I'm gonna plow through and save the money anyways, but there's a lot to learn. I think that more than anything, I just want to learn more about those higher level and higher time frame strategies. Which is also why I'm still kind of sitting here being like, should I go for the steepener? Should I go for the... I'm not... The thing I'm concerned about with going for the steepener is I don't know how much is actually in. Like, I think that there's probably more steepening to come, but I don't know how much further it's going to go. Or like if I was just to go short rates here, let's just say I'm short interest rates for the long haul. And let's say that I caught it yesterday and then I'm short from like 4.2, right? Well, I think we could get 4, but are we going to go back to like 3.7 like we were a month or two ago? I don't know about that one. Because they're still kind of talking like soft landing, right? So how do I make that kind of decision? That's what I really want to know. I don't know. We did get a pretty decent excursion there at 30. Like, I probably could have gone short at 411 if I wanted to go for it, but what I'm seeing at the moment kind of looks like just noise. I'm not sure if there's really a whole lot of reward in it for me. The S&P 500 did buy, though. I guess I called that one, right? Oh my gosh, I had this article open from yesterday and I totally forgot about it. I don't care about it anymore. So you know what's I've run into an interesting I totally lost my train of thought there, man. Oh yeah, I know what I was going to go into. I don't know if you actually want to go into. Okay, so you want to piss white girls off? It's probably not the way that I should start a topic off. But dude, I've discovered this thing that like really upsets white women. That's kind of funny. Okay, you ready for this? Okay. Explain to them why Taylor Swift is a narcissist. I said it. I'm telling you. Tell them there's only two genders. Dude, I saw this TikTok yesterday where this girl was complaining about how Taylor Swift only uses feminism as a weapon against other people. Like, you know, well, you attacked me, there's a place in hell for women that attack other women or that don't support other women or whatever it was that she said. So she was complaining about that because she's like, yeah, but when it actually push comes to shove, you don't do anything for feminism. True. Okay. So like I went down this rabbit hole and read like about all of the controversies that Taylor Swift has been involved in. And holy crap, guys. Like I thought that, oh, you know, she's like been able to fly under the radar and all. No, it's because what's really going on is she's a narcissist, and her media team has been very, very good at hiding it from the general public. Because in almost every single one of the dramas that have been there, she will, like, so for instance, one that happened that I thought was particularly like, oh my gosh, was she had a boyfriend at the time, and his sister was getting married or something like that, and the family asked Taylor not to come to the wedding. When she did come to the wedding, it was like a big distraction and everything, and the mom asked her to leave, and she was like super upset when she was asked to leave. For instance, like they asked her not to come, all of the stuff she came. So she crashed the wedding, right? And then like, or like another one, there was this thing with Kanye West where in his music video, he had a line about sleeping with Taylor Swift. And they claim, or Kim Kardashian claims, that Taylor like talked with them about it beforehand and was like totally in on it, right? And so then that comes out and Taylor Swift's like, that's absolutely not true. Like there's no way I would say. And then they produced the audio of her talking to them about it. so like any time that there's like some sort of like slight against her personally, like she takes it like super personally and tries to get revenge, and then when people call her out on it, she just like straight up gaslights the public and lies about it. So I would say has pretty strong evidence that she's a female narcissist. But oh my gosh, man, be very, very careful telling that to your female friends. White women do not want to hear anything bad about Taylor Swift, man. Like any attack on Taylor Swift somehow ends up becoming an attack on them. It's wild. So yeah, that's what I learned yesterday. Kind of fun. The action right here, I mean, they came back up from 31 up to 01 pretty quickly here. I'm kind of feeling like, you know, even though this does appear to be a more liquid market, I'm still seeing pretty big price moves and odd volatility, you know? My Google Chrome ads on my phone are getting annoying. Ever since I went to the cinema a week ago, it started showing me articles about Oppenheimer, and it just won't. Oh my gosh, I'm convinced that my phone listens to me, man. Because there's definitely this thing where like we'll have a certain kind of conversation, and then all of a sudden I'm getting ads for it. But you know what else? I actually quite enjoy messing with the algorithms. Like, I'll go on a binge. So like yesterday, the binge search was shower heads. You know, like most shower heads are like $50 to $100, but there's like $500 to $1,000 shower heads you can buy out there. And it's unclear as to whether or not those $500 shower heads are actually worth it. But you go to one of those websites and then they say, oh yeah, by the way, we do collect your cookies, and you just accept the default settings. And then you get all of these advertisements about shower heads. And it's really interesting to see which things people are advertising out there about and all of that sort of a thing. It really, and you know what the most disturbing thing about it to me is? it seems to me that there is almost nothing set up in our economy to really help you get the best product. To really get you the best product. Like if I want to buy a shirt and I want to know like what are the best quality shirts, it's actually like a difficult thing to find and determine. Like the ads that you're getting, they're not going to tell, they don't tell you anything about the quality. Of course, they're all going to say that they have quality shirts and they'll have little things about here are the features that make our thing unique. But like a lot of the time it's just nonsense. Or like, especially when you go on Amazon. So like if I go on Amazon and I'm like, let's get a 16-inch rainfall shower head. Okay. There's like 100 of them and they all look exactly the same. It could be drop shippers. And each one of them, when you go and you look at like the little pictures, you know, they'll have their own set of pictures, but they all list the same features. Right? So everything from the ads that you get and everything else does not lead you to which product is the best. It only leads you to the company that is spending the most on ad buys. It is just interesting to go through that. One of the things that I've been seeing from people on TikTok, because I will get TikToks about like how to be better, how to get better at TikTok, or how to promote your business through TikTok better. Because it used to be, you know, if you just came in and you taught people things, which is kind of what I do, that like people will come along and just buy your product, right? Which is basically what happens with us. We just, you know, we have everything in the video description. Have this synthetic dollar index in particular that's really, really valuable. And I don't have to talk about it or promote it very much at all. And, you know, just get regular. Now, I don't get nearly as many as I should. But, you know, I probably get 1 or 2 a month. Probably what I should do, I keep forgetting to do this, but probably what I should do is see if there's something built into PayPal that allows me to do like an affiliate program so that, you know, somebody that actually is really good at the marketing can come along and do it for me. Right? But they're saying that just coming along and giving information doesn't work anymore. So like people's media consumption has changed and you have to do things in a different way that creates a connection with them that will lead to a sale or something like that. I'm like, well, that really kind of sucks because I'm kind of a little bit sick of everybody trying to hawk something at me. You know, it's like everybody is just clamoring for your dollar and nobody wants to do a good job. That's what really sucks, because there was a day where I remember, there was a time that I remember at least where people cared about the quality of the work they were giving you. And it bothered them if you said that their product wasn't really very good quality. I blame having low interest rates for too long. We'll see. Maybe we actually get a recession. Maybe we actually get a recession, and when we come out of it, people think differently. I can only hope. Not that I hope for a recession, but if we do have a recession, I can only hope that it changes some people's attitudes for the better. It's still like that here, e-commerce, not that much. It may be a uniquely... I'm sure that Americans would be more prone to it in general. For sure. I guess a large part of the problem is that we rely on crowdsourcing for... to tell us about the quality of products. And so companies just learn how to manipulate the social media crowdsourcing sources. And the kind of places that would normally like have the money to like do really hardcore testing on consumer products don't exist. Like, you've seen all of the effort that Linus Tech Tips has been going through to be able to test electronics stuff. How do you create something like that for consumer appliances and all these other things? Well, you don't get it. It's just like a newspaper will do a thing. Oh, go buy all of these things and test them. You don't get like real quality testing of stuff. By the way, over the last 20 minutes or so, we have seen a steady stream of buying both in the 10-year and the 30-year. Despite price not really going. There is a little bit of tug of war going on at 111 even. It is. It really has gone back and forth here quite a bit, hasn't it? I don't know if I can really take a trade now. Like, I really don't like getting into a trade 30 minutes before I'm ending because it usually takes about 30 minutes for a trade to go. We do get crude oil inventories in a minute here. Well, there's oil. Tell you what, the S&P really gave it up. That's a pretty big, that's a 30-point swing. That's a way more volatile than we'd seen recently. They're definitely spending a lot of time at 111 though. It seems like they stay bid 111 even, and all of the volume goes into the 111 half. But like, if you come back and you look at the 10-year here on the screen, I'll show you. You can see where they've done this multiple times now. And even a little bit, if we draw this further back, even a little bit over to here. So that probably means that trying to take a trade at 111 is probably not the best move. By the time it would move away from it, I don't think we'd have any opportunity to do anything. So I guess we just have a day off today. Well, what do we get tomorrow? Thursday? Jobless claims? Friday is going to be bonkers, right? I don't know. Like, does non-farms even matter anymore? Because I kind of feel like it doesn't. But the PMIs? That's not put out by the government, and market has been paying a lot of attention to those lately. Order flow has been so hard to read post GDP. I'm not so sure I completely agree with that, Mr. Bond. I think that you had a really, really strong and extended meta order And everything since then has just been post meta order impact. Like, if you really laser in on the, because this is where you'll laser in on the order flow and kind of miss the bigger picture, right? The bigger picture is this is all noise. Like, everything from basically here on is basically noise. It's just, there was the big meta order, they bought everything that they needed, and then the market just goes back into random market making mode, right? Because again, the thing that we want is we want to catch these. Well, I couldn't have caught the original news, but I could have come in here and said, oh yeah, this is going to keep going, they're going to need to buy, and I could have caught this, and I would have had a good trade. And even if I'd failed here, I still would have made a decent amount, right? But if you miss that, you know, from here, it's random. It's just, it's random. And yeah, if you zoom in on, like, if we just zoom in on the market orders, for instance, maybe you can work something. Can we buy here? Oh, no, maybe. Seems like they are buying. Maybe I should go long. But then, in the end, it doesn't matter. Why is that? Well, because there's like a really strong liquidity hole at 111. So it almost kind of like doesn't matter what these guys do. They just kind of get sucked back into it. And you're really going to need like a really, really powerful impulse to pull them out of that hole. Because at this point, like, what is your incentive to do anything else? You know? Like, who's the slacker that needs to go and buy a bunch of treasuries today and didn't do it at the very beginning of the session, right? Feels like they aren't buying above 111. Well, that's true to some extent, but the value of being able to see these meta orders is that you're able to differentiate between action that is being pushed by a large meta order, action that is being pushed by a correlation, and action that is just noise. And right now, I think that we are in just noise. Now, I should note, by the way, that the Japanese yen has been turning down a little bit harder here recently, but the treasuries aren't staying, so that kind of suggests even more strongly that we're like in a big liquidity hole that's really difficult for them to pull out of. I'm browsing Reddit here on the other screen, and I see this guy that's like, oh, I made a neural net trading robot, but it's in trading view, and like when I look at the curve and everything, it's not that great. Percent profitable, 54%, and 500 trades, that's not enough. I appreciate you sharing it, though. r/true unpopular opinion. Biden should not run for re-election. Yeah, that's a really unpopular. Okay. Only like 70% of Americans agree with you. Do winning retail traders make money from institutions or from other retail traders? Probably from institutions, actually. Interesting responses in that one, but we'll reset things and we might get a little bit further of an excursion here. It's at the lower end of the range, at least. Yeah, you can work with neural networks, but then you choose to make it work with trading view. What? Yeah, exactly. I found some code in an indicator I liked and recoded it to fit better with my strategy. Oh my gosh. I didn't even read the comments, dude. So let me show you this. Okay, so here it is. He's got it. He took a picture of his laptop screen with his phone, right? And the first comment is, knows how to program a neural network, but doesn't know how to take a screenshot. It's just overfitting, try forward testing. Yeah, I think so. It probably is overfitted. Especially since the win rate is only 54% and you're kind of only like, and you're getting like 1.5 is kind of sus. Profit factor of 1.5. It's a little sus. But that's kind of the thing I don't like about the TradingView backtesting is that it doesn't really give you everything that you really need to make a decision. Elon Musk booed by gamers faces bring back Twitter chants at LA event. What do you think the chances are that a year from now Elon Musk rebrands it back to Twitter and then makes it a classic thing? Russia has right to war with each and every NATO country, says Medvedev. Okay. Sure. Try that one, see how it works out for you. Yeah, Medvedev should be mobilized and be sent first to the front line. There you go. The spoos, I find the action in the spoos today very curious. I'm going to be interested to read, you know, the synopsis and so forth today to try and get any idea of what's going on over there. They finally chewing into that big ZT. Should we buy it from there? I don't know. I'm worried that it might just like settle there instead. Kudos for whoever held that out there for being so patient, right? Okay, I'm gonna fight with Anthony Crudelli on this one. Are you relying? So here's Anthony Crudelli 34 minutes ago. Are you relying solely on technical analysis? Don't forget, what really matters is how the market responds to your technicals. That's the key to better results. Isn't that just more technical analysis? Hmm. Do you know something about the order matching algo? I do. So the way that it works is you put out a limit order and then you wait in a queue and it's first in, first out. And so when a market order comes in, it's matched out against the person who's been in the queue the longest. I mean, there's other order matching algorithms, but it doesn't apply to any of the markets that we trade. Interesting. Well, what we just got here was probably the last move before we got to get going. But do you see how when we recovered there from how low did we get? We didn't quite get to 29. We got to 29.5. But do you see how the liquidity is considerably stronger now in that area since then? I don't know if that's just the market makers adding the liquidity in now that they've said, okay, 111 is the place, or if that's sign of large players out there in the market buying still. I guess we'll find out, but I suppose there could be a possibility of there being another leg in the future. Are there other types of algorithms between time, priority, and pro rata that you know of? Well, yes. So if you go to the CME, there's actually like 6 or 7. Although they're basically all just different variations of pro rata. Nah, I like really, for our purposes, first in, first out is the only thing that you need to worry about. Coming back down again. And not that much actually trading in those areas either. Well, I guess we'll probably end on the earlier side today. So it sure does seem like it's kind of going sideways here. Well, not going sideways, but I'm just getting a little bored of it, I guess. I can smell something and I'm not sure what it's coming, if it's like food or my breath. Well, it was an okay day today, even though I didn't take a trade. I guess not losing money makes a day a good day these days. Oh, man. Oil took a little bit of a dip after the EIA numbers, but they seem to be recovering okay. S&P 500 just come back to the price they were before the market opened. You said this is not working in market? What do you mean? Matt, you're going to have to ask me tomorrow. I'm going to get going, guys. Markets surprised again by revisions. GDP. Okay, guys. I will see you tomorrow. Stay excellent, team.